Happy Sunday, traders. This is Trader Sam with your Sunday, May 17th, 2026 option review video. Hope you're having a great weekend. And we have 18 trades open as of the close on Friday. So let's take a look at them, see how we're doing. Uh, Starting with Adobe. Looking a bit better than it was on Thursday when we last looked at it, and had a nice day, up 4.5% almost. And just when you think they count you out, they bring you back. So, but a lot of work ahead of us here, and we don't have earnings until the week of June 12th. So we have some time to recover. So software stocks were getting a bid on Friday, and that was nice. So if we look at the IGV, yeah, that's about 17 bucks off the lows. So can't complain about that. So Adobe ought to benefit. So I still have some faith in here. And, these longer term swing trades, you got to be patient with them. Sometimes they pay off and they pay off well. Sometimes they don't. But MACD's trying to flip back positive, and implied volatility is increasing here. So uh, my guess it's due to extra call buying. So we are still down 54%, nothing to write home about yet, but we're still in the game, and we're far from the lows here, $24. So you could say we had a higher low here and a higher low here. So did we violate that low? 233. Yeah, barely. We barely nicked it. Yeah, 231. So we didn't make a higher low here. So that's uh, not the greatest, but we'll give this time. And I think that the death of software stocks has been greatly exaggerated. Amazon taking a shot here after a pullback from the 278 level. We got as low as 260.89 on Friday. So we took a shot at a 265, 285 call spread in June, plenty of time. So we'll give it 50% room, see if we can catch a bounce. May not come right away, but that's why we gave it time. And MACD is definitely on a sell signal on a daily. Doesn't mean we can't catch a bounce, even though that's the case. And volatility is kind of in the low third of its range. So IV rank is 23%. So nothing really going on here. And Amazon, I like it here, and I also like it for the longer term portfolio if you're looking for stuff to add to it. So Amazon, see if we can't catch a bounce back up to the all-time high of 278.56. BSX, not so impressive so far. I made another 52-week low on Friday. Didn't close much off the lows, but even though healthcare is starting to look better, but I guess Friday was not doing well. The only thing that was up in terms of sectors was energy. And this blue line here is the 50-day. So XLV, the healthcare ETF, is still under the 50-day. And that's not helping our BSX trade, which is a 60, 55 put spread. Let's see if we can't get something going here. It's too cheap to walk away from, but obviously cheap can get cheaper. And we added about a buck of risk here on the roll. Let's see if we can get something done here. Definitely not one of our better trades. HRL, not it's still getting beat up. I mean, one, two, three, four, five, six down days in a row, and call it seven out of the last nine. So they're definitely not giving this one any grace at all. But I still like it, and even though we're down pretty good on it, uh, it's a long-term trade into January of 2027. I guess I think they're going to come back after them. I think that's when you look at staples, they were also down on Friday, along with every other sector except energy. So that's to be expected. But until some player comes in and starts buying up some of this and finding it too cheap, and I think it's too cheap relative to the rest of the food stocks and consumer packaged goods. But they're going to keep beating on it until it goes. And shorts never learn their lessons until they get this comes up with a 10% up day and they get blown out of their position because they'll keep coming after it until they can't anymore or they get blown out because they'll take out 4 or 5, maybe even 6 days. In one update. But so far, disappointing, no doubt about it. HRL not showing any relative strength, but I'm not deterred. IWM, we fortunately got stopped out of our long call on Friday, which we booked the profits, and it's a good thing that we did because it continued to go lower throughout the day. We do have a short strangle on, and lo and behold, we are up on this now at this point. So with a short 285 calls and short 255 puts. So the call obviously is underwater, but we've done one roll of each the call and the put. So nice to be on the positive side overall on this trade at this point, even though we are out $3.13 on the calls, but we're up a buck 89 on the puts that are open and harvested some profit. So we've got how many days? 33 days, 32 days until expiration. So within the next 10 days, we'll probably roll this out to a further strike and see if we can keep this going and maybe reclaim more of that premium. JP Morgan, uh, just like financials, just they're not going anywhere and they're underperforming. In fact, as long as we hold this area here, this is an ATR, average true range trailing stop. Hopefully we don't break that, but MACD is definitely negative on it. We are at the close to our cost basis. It closed at 14.52. We paid $14 for it. I may even back off this 13.75 again. I don't want to get stopped out of it, but if you are not of the long-term mindset that I am, then I wouldn't blame you if you stopped out at break even for the rest. And it's just going to take some time for the financials to get their act together back again, because even throughout this whole rally, which was mostly a tech-focused rally, the financials have not performed. So we need to see something different there. At KIE, unusual that it was up on Friday. And that's on a day where interest rates made a new high, and MACD looks to turn positive. So if you can figure it out, good for you, because I can't. But KIE still above our original cost basis. We've taken a couple profit targets. And if MACD can flip over again and we can take out this parabolic stop and reverse stop, that would be nice. And so far, it's kind of been a slow but profitable trades for us so far. Nothing more to say. MP Materials recovering a little bit on Friday. This is one that did not benefit from the talks, the China talks, or the summit, whatever you want to call it, that happened between Trump and Xi. We're down 35% on here. We have a 50% premium stop on this one. We bought just a straight call, the 65s in June, and so far, no mas. We've got a MACD that's on a sell signal at this point, but Friday's bump on a down day was nice to see. So we'll see if we can hold on to this one. This one tends to be a bit volatile And so far, uh, my expectations for this to go and make new all-time highs has not come to fruition at this point. Microsoft had a nice day, and there was some news. I can't recall exactly what it was, but um, at this point, we are waiting for our next profit target. This is a long-term trade. I have it set at 48. So we didn't get close. The last profit target we took was 43.50. So far, this is working out nicely, and I like this for the short and the long term. But obviously, if tech is going to get hit, if the market's going to get hit and pull back, this one will come back right down again. So uh, hard to say. My guess is that if it weren't for news on Friday, this stock would have been down with the rest of tech. In any case, MACD is threatening to turn positive, which would be nice, and implied volatility is looking to increase here. So we'll see if this one continues to perform for us. We caught a nice uh, grab on this one when it came in earlier in the month and late April. Yeah, this trade has been on for 54 days, so we've had it for a while. NVIDIA, we have two trades on, and one of them is the 190, 170 put spread. And as you might have heard, we have earnings for NVIDIA on Wednesday at after the close. So after a terrific day on Thursday, notice that it was almost completely outside of the Bollinger Band. And if you look at just the recent history, you can tell it does not hang out or outside of the Bollinger Band for very long. And obviously, Friday was a weak day for tech stocks, and um, Nvidia gave back over $10, 4.42%. So um, any air, a lot of air was being let out of the um, semiconductor trade, and Nvidia was no exception to that. So we took profits on a third to a half of this at 95 cents, and we're at a buck 34. So uh, we're going to hold on to this through earnings on Wednesday. And I may consider rolling this out or repositioning it, but I don't think I will. I think it'll be just fine, but maybe I want to reposition it to start out with more profit or more premium than we have here. So up to you, but if you don't want to take the earnings risk, then you'll need to close this before the Wednesday's close. The other one we have on is a um, combo going out to March 2027. This is a long-term trade. We've taken one, two, three, four profit targets, and we got pretty close on Thursday to taking our fifth one. And I am a bit aggressive on the next profit target because it is a long-term trade. We are in a 175, 250 call spread financed with a 125, 175 put spread, and the pullback on Friday got us further away from the short strike. But this is another one we will carry into earnings, and if you don't want to take that earnings risk, you'll need to close it by by Wednesday afternoon. Palantir doing really nothing, going sideways. We have, again, two plays on Palantir, a bull put spread and a combo similar to NVIDIA. So the bull put spread is one that as a result of two prior rolls, and we're down about 20% on it. So we'll just let it do its things. 135, 100. We're slightly in the money on it. MACD is just on the sell signal, but going sideways, and really nothing happening here. But I'm not worried about Palantir. The custom or the combo play we have is a 130, 210 call spread finance with 100 50 bull put spread. We took one profit target. We're waiting on the next, and we can be patient with it. It's a long-term trade, and we'll see what happens. QQQ, we have two trades on this one. The first one is our hedge play, and we took profit targets at $2 earlier in the week when we got this little dipsy doodle. But Friday, surprisingly, if the selling was that strong, I'm not sure why we weren't able to get to another profit target on here, even at the lows of the day. So we got back close to the $2 mark, but I wanted $3 for the next profit target. In any case, this has until June 12th. And this is one of our hedges. So if we take this, and let's see. Come on. Sink or swim. Uh, just not doing it. I don't get it. Supposed to pop up the trade. It's not, but let's go to the Analyze tab, and been having some issues with Thinkorswim of late. No, at SMCI. They are making some updates to it. So this is June 12th. And it's the $705, $665, and finance with the September 30th 600 call. Okay. So this might be the case. So it's 50 cents. I'm not sure why it's saying the PNL is so that's if we put it on, it's going to cost 53 cents, and we put it on for 16 cents. Okay, so we are underwater on this part, making sure. Yep. So we would get collect a 53-cent credit if we were putting this on. So makes sense. In any case, the structure is equivalent to being short 12, a little over 12 shares of QQQ for each unit that you have on. And so if you have 10 of these on, it's like being short 122 shares of QQQ. And keep in mind that with the pullback, this short strangle that we have on, which is looking a bit better after Friday's pullback, not in the profit zone by any means, but this is acting as a hedge for us at this point on the pullback. So we have two plays that are in the bearish camp for us right now, at least as the strangle hits or strangle sits right now. SPY, we closed our inflection point spread for a loss on Friday. I almost put on a different one, but I wanted to wait for more strength if the market was going to. Let's see, did we close the gap? 743.46. Yeah, we came up within 7 cents of closing the gap on Friday. When you look at the action intraday on Friday as a 30-minute chart, we almost got there. 740, within 7 cents of closing the gap, and then we went out into the close. So I wanted to have something more than that to put on a different hedge on the SPY, but what we still have is a strangle, which is also acting as a hedge at this point, since we are short the 760 calls and short the 530 puts. So we're still down 84%, plenty of time. This one has what, 44 days to go? Yeah, 44 days for expiration. Plenty of time for this thing to turn around. As I mentioned earlier, TLT interest rates um, popped on Friday, and this is no longer uh, a long bond that's in range. If we zoom out to the weekly, uh, no, not the 4 hour. Geez, think or swim. You can see that we've taken out. Actually, we haven't taken out this candle where the low is 83.30, so we're still in range, so to speak. But um, a little pop in interest rates tomorrow can really can take that out. So we'll have to watch for this one. We've been selling TLT puts for a long time now. We're down about 115% on this particular one, but volatility is getting pumped into these. You can see here on the TLT, where did the implied volatility rank? Yeah, went up to 41%. And you can see here a ton of puts traded on Friday versus the call. So 1,000,004 options is quite a bit for TLT on one day. So we'll see what happens. This one's has 32 days before we have to deal with it. But this is trade number, which one? Which one? This one, number 16, we're trying to shoot for. Next one is TTD, and this is our final open trade, and it's looking better. Let's look at the chart. Still not getting any altitude, but the bears are pressing. They're not getting anything, and sooner or later, they're going to cover shorts if this thing can't break this 1974 low. It won't take much for it to happen, but this is telling me that we're probably going to get a little bit at least of a short squeeze. The nice thing is we roll these out from May, which the May put spread, we were up a little bit. We're up 24% on these. So and this was a roll from May into June. So we'll let this do its thing. I'm not quite prepared to buy long premium. I want to see something more with more oomph to get us to the 200 or the 50-day. But right now we have a short put spread and it's working out okay. So let's take a look. We'll count the negative trades. 1, 2, 3. I'm going to count that as a positive. 4, 5, 6, 7, 8, 9. So we have 18 trades that are active. Half of them are profitable, half of them are not. So not so great at batting average, but as long as our average winners are greater than our average losers, and we'll not have to worry about it too much. We'll be making money. And that's the key here. That's not about your winning percentage. It's about your average winners versus your average losers. In any case, I'll be back with you in the room on Monday morning. Hope you have a great rest of your Sunday. Thanks for listening and watching. And if you have any questions, at Trader Geek Sam in the forum, or follow me on Twitter at Trader Geek. Take care, and I will see you tomorrow. Bye-bye.